Hey everybody, great to be back here with you, Mike Fairborn, for our ThinkScript class, folks. And this week, it's not going to be such a complex code as it was last week. In fact, I wanted to go back to some of our basics and really try to find out and look really at what many of us are looking at in the markets for strength or weakness. And that is, in many cases, the flag type pattern. Now, the flag pattern itself noted for a strong move to the upside and a mild correction to the downside. But with that flag pattern, I want to combine two concepts, in fact, two codes, using kind of a really older method for the flag pattern that a good friend of mine, previous colleague, Ken Rose, had found. And he doesn't even know where he got that code from. But it's interesting. I want to dissect that code a little bit with you today. And then add to that, hey, folks, it's not just the flag pattern forming. We have that code, but it's what happens at the end of the flag pattern. Are we seeing a confirmation? Is it ready to go in the form of a closing above the high to low day? So piecing together, we're kind of fusing together a couple of key ideas that work maybe better combined together than they would individually. Okay, and you could say, yeah, that just seems like a reasonable concept in a lot of cases. So we'll go ahead and take a look at that, folks. Good to be with you, though. Hello to each of you. So definitely questions, comments, throw those into the chat so we can tap into those. But yeah, sort of a broader look today at some of the concepts that I think, and price patterns, general setups that I think many of you are using more frequently in the market. And you know, generally, I think a lot of us are. So hello to you, Richard. Good afternoon to you. We've got the Wire Rabbit. Hello to you, as well as David, Life in the Fast Lane, Riceberg, and Thea. Welcome on board, everybody. Folks, any questions, comments you have, throw those into the chat so we can address you, help you there. We do have a good friend and colleague of mine there in the chat, Kevin Horner. That would be KH. You'll see him in the chat as KH. All right, let's dive into some disclosures to get going here. Then we'll jump on into things. Information is for general information purposes only and should not be considered an individualized recommendation or personalized investment advice. Schwab does not recommend the use of technical analysis as a sole means of investment research. Paper Money software application is for educational purposes only. And some additional points just to kind of take a look at there. Okay, as you can see, now backtesting results presented are hypothetical. We do look at backtesting, maybe not some specific results, but just wanted to state that there's no guarantee that the same strategy implemented today would produce similar results. All right, past performance of any security strategies not guarantee future results or success. A look there at some of the futures disclosures as well. We might reference those. We have done that, certainly from time to time as we've gone through things. All right, and let's do this. Go to our next slide here. Okay, so taking a look at our general idea, the general idea and what we talk about here within this class in terms of scripting. Now, and we brought this point up previously, and that is, you know, it's helpful when you're using indicators, and specifically today, we want to take a look at some general ThinkScript that we've been able to put in place. We don't really have indicators as much as we have just some really straightforward script that I try to just boil down to its bare basics so you can understand it. But identifying the goal generally is what we want to do. Is it doable? We actually had some existing code, as I mentioned to you, that Ken had found about a flag pattern. I don't even know how long ago it was done. We don't even know who did it. But I'm going to share that with you so you can see it. The original code, we can take a look at it, and then we want to see, you know, is there anything else we can add to it? Now, there were some additions that Ken made. I've done a couple of additions to that just to kind of make things a little bit smoother in terms of the flag pattern itself, right? A strong upward move in the market that is already in an existing upward trend. That's a key point. How many times have you seen these longer term trends do this? You know, how do you get higher highs and higher lows? I mean, one way is within a nice trend. And oftentimes what, you know, some traders would consider a nice trend is the strong upward move to the upside, right? But then followed by these very, very mild corrective moves right through here. That is the flag that you're seeing, right? That is the flag formation. We are looking at this. So we're just not seeing nearly the type of selling that we would otherwise get relative to the buying that we saw that really brought prices up in the first place and really helping to potentially contribute to that trend going forward into the future, right? That's the idea we're looking at here. Now, but the second concept we were looking at, in terms of meeting our goal, is can there be a hold in there too? A close above the high of the low day. And when that occurs, that's two things. So we've got one over here that needs to set up. We're looking at a bull flag. We're going to go through the details of that. And then we've got plus another one over here. Two individual parts, but combined together. 1 + 1. And then that we got to have both of these in order to give us the flag plus the hold. Okay. Basically is what we're looking at here today. So there are some custom scripts. We are going to share that thing script in class, so you've got it. It's really one that I think could be quite useful, for us to use in different conditions. We're really looking at that strength in the market, prices coming up. So let's go ahead and pull that up. Let me drag this over. We'll pull up our thing script here. Let's see. Oh, 1 second. Sorry, guys. Okay, that's good to go, and we're all set here. So let's pull up our charts. Sorry, just a couple loose ends looking at this, but we're all set now. And drag, why won't you go up? There you go. There we go. Oh, geez, finally. Sorry about that. All right, well, let's do this. I'm going to pull this over here to our left, and I want to highlight something here. Just real quick, how are the markets doing? Well, the markets are continuing to show some volatility. We're kind of holding in a sideways range still. I know it's a big bar. Today, off this high, off this low, you can see we did, bounce off literally this extended lower trend line. They're very interesting in the market. But, coming over here, you can see that there was a little bit of a possible support level here. Remains to be seen what we get. Traders will oftentimes say, well, some traders will say, you can find strength in any market. And within that, you're going to find some groups of industries and sectors specifically. And I'm going to pull this up because I've used this ever since I've seen Mr. Horner use it himself in terms of as a way. And that's not the one. We're looking at the rotation grid. But as an approach to find basically where strength might be in the market, as you just broadly look at this is interesting because I talked about this in my swing trade class. Folks, we had seen a little bit of a flag pattern here across the entire sector. This is actually healthcare. Sorry, the title slipped off the screen for a little bit. It is there. Materials. Sometimes these will flag a little bit. The financials, not everything looks like that. In fact, you can see discretionary, new low. So just wanted to highlight, although the market itself, the S&P 500, has shown some weakness recently, will it hold that support or not? We don't know, but there are other areas that we could see rotation in the form of this sector rotation grid. Right, this is just a comparison showing relative strength of the sector. How are the individual sectors in the S&P 500 doing relative to the S&P 500 itself out there as well? All right. So with that, let's go ahead and take a look at actually a fairly old script that we have out there, which is just the flag itself. And before let's do this. Let's dive on into it. Let's pull this up over here. Okay, we're looking at Apple right now. Just a quick review of the flag itself and what's going on within our codes today. So why they can be so helpful is this strong move, which oftentimes when you get a move like this can take out prior highs, right? The bottom line is what we're looking for here is a higher high and a higher low. And as you guys know, with this particular method, what we can do in terms of the trend line itself, what can help us, or with the trend, I should say, with the trend being up, is looking for those moving averages specifically. So what about the moving averages? Is price above a moving average? Now, a common one, and I've made this flexible on the code so we can add this in, but just a common one obviously would be a 30-period moving average. Believe me, one that we used to use, wow, a long time ago, using the 3 green arrow approach. And those arrows, were based upon, one of those arrows was based upon the 30-period moving average. Now, as I throw this out here, you can kind of see how even that reacts pretty well with a number of different stocks out there. This is just kind of one we're looking at on the fly here. But bottom line is, when the flag is forming, the way that this code is set up, when it is forming, it has to be above the 30-period moving average, okay? It can't be like flagging and breaking back down below the 30. That could be considered a sign of weakness, as you're not really defined above that range yet. So if I zoom in onto this range right here, you can see we're up over that level, and each one of these bars coming back down would count. Now, they have to be above that 30-period moving average. If any of one of them went below the 30, it would exit, that flag trade would not count. But because that's the case, this would have shown up on our scan or our column. I have built a column and a scan today. All right, so here is what would trigger it, though. And that's not just this, because sometimes you can look at these flag patterns. I'll tell you what, you can just keep looking at these flag patterns and looking at these flag patterns, and it can be a very, very long flag. In fact, you could be way up here, and the flag's going like this with the old code. We're still above the 30-period moving average, but my gosh, that is a big pullback in terms of the flag. So we're really trying to narrow that down to about up to 4 days. Really I think the script, 2 to 5 days is what we've got in here. 2 to 4 days. You can adjust it, but we've got it set up into that place. And then it ends with a close above the high of the low day, which is what often can get these flag patterns moving, folks, in the right direction. Yes, let me send that out. In fact, I'll share that too in the description field. I do see there's a request for it out there. So yeah, let me just quickly do that real fast. That is a good catch, just so we've got it. And I'll just share this right now. Okay, so share this guy right there, sector rotation grid. There you have it. Okay, so I'm going to put that in the chat box, and just keep in mind that Think scripts aren't guaranteed for timeliness or accuracy. I will have that code also listed in the description field down below. Good catch. I should have hit that earlier. No, I slipped up on the on-demand. Sorry. Let's go back to this. So that's our Apple, but that's what I'm looking at. We're looking at the combination of the two. Okay. So that was one example of why having that flag pattern that, pulling back and still holding, pulling back quite a bit, but holding above, let's say, a 30-period moving average over a long stretch, over a long pullback, might not be the kind of flag pattern we're looking for. It's got to be above the 30, but we're only giving it a shorter term time frame, within, like I said, a 4-day time frame. The other part of this, where we're fusing those two concepts together, which is a totally different code, and that's been floating out there as well. But I think it's been floating out there as a scan, which is not as effective, not nearly as effective, unless it's plugged into the right area. It could be in an upward trend. It doesn't have to necessarily be defined as a bull flag pattern, but that's one you'd want to see. And the way that I've got this set up right now is it's either going to happen, the hold's going to happen on one bar. The same bar, it's happening today. It's closing above currently. In other words, it's currently above the bar. It hasn't closed yet, but the close is currently above the flag low, or it's one bar ago. So we're giving it a little bit of time. In other words, over here, let's look at this one. A little bit easier to see. Just want to describe this code, folks, so you get it down and you understand it really clearly when we share that, so you have it. But over here, first of all, that's not a close above the high of the low day. Is that a 4-day pullback? Yeah, it could technically be above there. We are above the 30-period moving average as well. This is your close above the high of the low day. We're seeing this in hindsight. This bar is set in place. It closed above the high right there of this low day right there. Change some of those drawings up right there. So we closed above the high of the low day right there. Now, we're also looking at the possibility of this day as well. So notify us when we are either on this bar, and like I said, if it's above the high of the low day at 9 a.m. in the morning, it might close below, but it could show up on your scan ahead of time, okay, or on a column. So you can get on either one of these or this bar, the following day, which, by the way, some traders do like to see that follow through bar, okay? But it's a way to trade. So three things going on. It's above the 30-period moving average. You've got a flag pattern that's above that time frame as well, that's shortened, and then you've got a Cahold pattern. A Cahold, it's really just a single bar within one day. So you've got it that day or the next day. Now, a quick note: why would you need the Cahold pattern there as opposed to other areas? Well, to be honest with you, when prices are trending down and you are below the 30-period moving average, I mean, you're getting a Cahold pattern right there. So individually by itself, it might not be such a great setup. That's your low. Here's your recovery. And oh yeah, you're still trading down with the trend. And by the way, not only are you below the 30-period moving average, there is no bull flag either. We don't see a strong upward move and a mild correction too, which is what we're trying to generate with this code. Okay, so first off, let's start introducing these right now and getting them out there so we can take a look at them right now. The first one I did, we haven't done one of these for a while. We can talk about just some variations between a column script, I think is helpful, as well as a column, as well as a scan. So just some minor additions at the bottom when you're wanting to put that in place. Let's do it right now. So here's our Market Watch tab right now. We did create a column, so let's go ahead and put that column in right now. Here's the earnings beats. I'm going to keep this in during this time of year anyways. We can see over the last 5 days, we got earnings beats over here. You could find that. That is also listed as a ThinkScript class that we did too. So those are really helpful too. If you take a look at that class, as you guys recall, I still have it set up so it does notify me of alerts as well. So little side note, talk about that only during earnings beats. But there it is right there. Flag plus the Cahold right there. It's all the way over to the right. I can't even see it. But let's go ahead and pull it up and then we'll talk about it a little bit more. So here it is. There it is right there. There's your flag plus your Cahold. The Dow Jones Industrial Average, we're not seeing too much going on right now on that. But what we will see is if we throw this on the S&P 500 right now, there's a total, and we'll let this load up here, and we'll find it. And so this is going to load up here for us. It does have it blacked. You're gonna want to click on these. We'll give it a second to load here, and we should get some popping up momentarily. Oh, it's going to take a little while. Let me take this one off for now. I'll customize this guy because you know that you can hit a level where you're getting too many. If it's tapping into too much data, it's going to be a problem. Okay, so here we go. We're just hitting it right now. What we're just looking at too on some of those rotations, folks. There it is. There is your healthcare right there. So healthcare showing up. You got a few others. The way we've designed this here, and I don't know what's going on with this company here, but I can't get anything to go with this Q, symbol Q. So it's just not pulling that data for us. Okay, the way we've looked at this, it's just set as the number of bars right now. So this is 2 bars ago. So in other words, we had the Cahold, and then we had the next day. It's on the second day. So this is dragged on for a total of 2 days. I've got that listed first, and I've got it down to 1, and these just happened today. So let's take a look at some of these right now. And one thing that I do love about the columns is instead of just getting the symbol over here, what we can do is we can go over here to the left-hand side, which is just so nice and easy to do, throw in a watch list, and then just have it set up where you can click on it and have it attached right here, linked to the chart. Such an easy, quick way to do things. Let's customize that guy right now. Oh, that's right. That was our bull ray. There's the, you know what I'm going to do? I'm going to actually show you the flags as well. I'm going to look at both of these. But this is the one, and then I've got the Cahold right there with it. So I've got them both. I've got the flags. I guess we can look at the flag code separately. Let me just do that. Let's look at one at a time. That was the one that Ken had found, but here are this is the flag plus the Cahold. So I've got it linked up. I'm simply just going to click on this now, and it's going to pull this up here for us. Okay. Now, you could say that, hey, Mike, it's still, it was sort of downtrending through here. Now, it did hold this support level, but it did take out a prior high. So you've got a higher high potentially a higher low right now. It is above the 30 period moving average. Each of these formed above the 30 period. Let's add that in as a confirmation. In fact, I'll knock these guys out so we can just keep this nice and easy here. Okay, simple moving average. There it is. We were looking at the 30 again. This can be changed within the script. I'll show you how to do that. Let's just look at it first so you can see what's going on. Okay, there you go. So we have the move up, and you can see it was really caused by maybe an earnings bounce. So we're past earnings. It looks like the market responded positively on this CTSH. We're above it. We've come back over a period of time. There are your bars down here, and can you see the Cahold? Right about there. We closed above the high to low day. And if we would have got this earlier in the day and it closed lower, it might show early on our screen over here, our tab scan, or, basically it could have held higher like it did here. But I'm just saying that this day does vary. I just want to make sure that it's closing above the high of the low day on the current price. So it's not the close of the end of the day, but the next day you're pretty much guaranteed. And this was, remember, this was a 2 bar ago. So you pretty much got this in place. So that's what you're going to get with these 2 bars here. By the way, just a quick note, there is a survey in the chat, folks. I always appreciate your surveys, and they've been very, very helpful for me in terms of content ideas too, topic requests. I love those. I fulfilled a lot of those, and we'll continue to do those that I think are, that can be done here. Some are just, we're still waiting for more ability to meet those. But yeah, love the topic requests. If you're able to complete that survey, that'd be fantastic. Folks, if you like these presentations, be sure and smash that like button. Lets us know that this is useful, valuable for you. That was today's kind of concept, getting those setups and scenarios, bull flag or bear flag, that could set up and work in our favor this way. We're going to go through each of these though real quick. We'll hit the code too. I'll show you the scan as well. All right, be sure to subscribe to our channel too. A lot of great content. Connie teaches some great classes as well. And yeah, be sure to subscribe to the Trader Talk channel. Here we go. Let's go ahead and take a look at IDXX. Okay, upward trend. Yes, there's our 30 period moving average, past earnings as well. Oh, interesting. So we're getting a few, just as a side note, we're getting a few earnings that were actually really quite good. Prices had held up, and we're getting a little bit of a pullback within that range, followed by a Cahold. And you can see right where that Cahold would have been. Right there was yesterday, but like I said, or at least a day later. We don't want to let him run too late, although that code can be changed as well. I just kind of kept him quite tight, but there it is 2 days ago. So far, code looking great. Again, do you see the theme? We're not looking for this, but we're getting some also during earnings season, some interesting moves that might change the dynamic of these trends going forward as well, because this too was kind of like near low support, longer term support, did bounce on that earnings announcement. Not a guarantee it'll go forward, but it's behind us, and the market responded positively to that earnings announcement. We can see that right there. So we're just kind of watching this and seeing. There's your 4-day right there, Cahold, and boom, we're still in our 2. We've got a few more of these to hit. Again, what is this? This is, well, healthcare. Stuck in healthcare here a little bit. That's right, Connie. Absolutely. And I look at those, and so does my manager. So does our manager. We have the same manager. They like to see what comments are in there too, if this is useful and things like that. So there you go. All right. Here you go again. Notice the trends. The trends seem to be sticking quite well. Don't know much about this company, to be honest with you, MTD, but prices had come down over that range. We're really looking for those flags that are kind of like noted for a strong upward move and a very mild corrective pullback. Okay, I'm sorry. I've been saying Connie normally, I think, does fill in. It's Kevin. My bad. Sorry, Kevin. But yeah, Kevin's got some terrific classes. In fact, tomorrow I'm sitting in for Connie on a class with Kevin in the morning. So I'm looking forward to that. But apologize. I'm just, yeah, My head's still in the code here. Been working on it all morning. And so here we go. So price is bouncing. This is another cool thing you might find too with these 30-period moving averages. Kind of a side note, holding there, bouncing off that level. Now you'll notice that the flag portion of the flag portion of what we're looking at here, the code, was above the 30, but the confirmation doesn't have to be above the 30-period moving average. It doesn't have to be. Because sometimes you'll pull right down to it, you'll bounce, flag, and then go higher. Ralph Lauren, there you go. There's your bounce. A little bit more clear there. You can see how close we got to that 30-period moving average with our last one on a 2-day. I'm going to go back to our 6-month chart, a little easier to see. Okay, so there you go. Cahold was yesterday. Bounce here. There's your flag. We already had what? What's part of a flag you're oftentimes going to get? Long-term breakout. What else has been happening again? There it is again. Earnings gap, a rally, and a pullback. So really you're looking at maybe 3 or 4 components when you bring these two ideas together, you fuse them into one, you're starting to see a lot of different things. Trends, longer-term breakouts, earnings, gap and goes, as well as maybe some support on that 30-period moving average. Now, these two right here, Cincinnati Financial Corp, okay? And that would be, okay, this is what I wanted to highlight too. So it could be a Cahold as of today. We don't know, but at least it's telling us, put it on your radar. This can change. There is your Cahold. That's your low of this pullback. You're closing above it currently. I mean, the last close, it's not a close. You're currently trading above it. But if you can close above it, it's just a little heads up that, you know, this one might be a change in that flag pattern as well. Next up, boom, boom, a downward move, but look at this. You're just barely closing above it. You see? See how nice that code works? When it all works right, it's right there. And there you go. Okay. All righty, let's do this. Now, I'm going to go into it. I am going to add in here too. Let's do this. I'm going to show you where this script originated from. You guys might find it interesting. I'm going to have this down here as well too, so you can see it. It originated in the flags, and this is the original code from Ken Rose. And I remember when he told me about this, he actually reached out to me and said, I found this one, and I watched his class. I thought it was fantastic. He did it quite a while ago. This was the code itself. Now, it was a little bit extensive, but you can see, yeah, original writer is unknown, updates done by Ken Rose, using some of the early coding in here, and that's still part of what we're doing here now. But, you know, there are some ways to improve just the size of this too, the size of this script. That is the flags. If you guys want that original one, let me just share that as well. Again, not guaranteed for timeliness or accuracy. Let me share the other one next. Here's the flags right there. That is the original guy. And let's back up a little bit, and we'll put in the Cahold here, you'll see. And so this is just updated by myself, but you can see what we're able to do here without all of that data, because we can define here a flag look back period and make this much, much shorter with even the Cahold with inside it. So you can have the Cahold within this bull flag and with a much, much shorter kind of concept here. Now, that flag looked for bulls and bears. Today, I just focused in on the bulls. So we would have a little bit longer section here, but not a ton. There's just a lot we can do with this. Okay, so here is what you can change up top within this column scan, is what it is. You can change the moving average. So if you wanted that to be, it's currently a 30. That was the original one that Ken was using. You could also have a flag look back. I did, yeah. So I did work with a, like a 2 to 5. I just said anything within a 5. Sometimes you can literally get a really short pullback and a move up, and that's what I've listed here. And you can just see how we've set this up, what defines our bull flag. The close is greater than the moving average, as I mentioned for the flag specifically, but not the others, but not the breakouts. itself, or the Cahold, I should say. Breakout, kind of a breakout out of the flag is what it would be. But you've got within this entire range in here, you've got the initial day of the flag going back a bar, 2 bars, 3 bars, 4 bars. We could add to this if we wanted more. Of course, we could just change what our look back period is as well. Now, up top, we can come down here and we can say, yeah, there's a break now, and so the close is greater than the high of the prior bar or a previous break of the current bar or the bar previous. And so that's where you're getting 1 bar. It's happening right now or the next bar. You guys can check out this code now. You can see down here, this is really kind of the makeup of the column scan itself relative to the actual scan in the scan tab, which we can take a look at too. But let's go ahead and share that. And let me just put this in as well. Flag plus Cahold. So with the Cahold too, what is that? Another way to look at a Cahold? Most traders would say that might be the confirmation they're looking for. Again, I've added 1 additional layer of confirmation, and that would be the day after a Cahold as well. So you've got 2 in there. I've thrown it in, folks. For those of you that are viewing this on the recording, all of these scripts will just be placed in the description section under more, under the actual video itself. Just scroll to the bottom. I'll have each of these there, along with that sector rotation. There's so many things we could share here. And that was originally Mr. KH's, Kevin Horner's. Okay. By the way, when you get that code, for those of you that are just saying this for the first time, go to up top under Setup, click on Open Shared Items right there. Post it in right there, just like this, Control V, or yeah, copy it in. It'd be Command V if you're in a Mac. Click on Preview to put it in, and then change the name of that right there. I just named it exactly what it is. That's how I find these things. Bull flag plus Cahold, a close above the high of the low day. Of course, that's at the end, but that's how it's done. And then doing that, you would then find it, because that one is for a column specifically. So you'd want to go over here into your columns. In any of the columns, right click, go into custom, and then you'd find it over here, whatever you named it, okay? And then you just simply click on it, add it in. You can change those numbers as you please, because some of you, you know, is there anything to stop us really from using this like on a shorter term basis? Look at this, what we have up top. I would, sometimes I'll forget this, but if those of you have different time frames, some of you do look at shorter term time frames, those that are happening within the day. And maybe you don't want to use a 30-period moving average. Maybe it's shorter, maybe it's a little bit longer because you're using a shorter duration. It's going to work because remember, it's not looking at days, it's looking at bars. So that's where the different durations would work just fine. Okay, you've got both of those there. Now let me show you over here into the scan. I've actually got it preloaded right now. The scan is helpful, I think, for a number of different reasons. I don't even have it. These are all the ones that pop up right here. So, and this is kind of nice too, because then you'll notice it gives us the exact same list of stocks that were over here. Actually, one's off. ROK. Oh, ROK is there. Sorry, it's just out of order. Yeah, it's listing. Okay, interesting. Yeah, I've got the color scheme mixed a little bit, but you guys get the sense. Actually, I think those are the ones that are, I don't know what's going on there. Oh, up on the day. Sorry, that's what it is. I was going to say, I don't remember messing with the color scheme, but there you go. They're just up on the day, but it should be the exact same ones here. I've used the exact same code just for a scan only. Let's hit that here in just a second, but why would this be so useful? Well, some of you might have your own scans that you're looking through. You might have some private data that you're looking for or that you've created yourself of different kinds of companies that you want to scan through that might be built up top here. Doesn't necessarily have to be in the S&P 500. Could be anywhere. It could be, all stocks, all symbols. You could add this in, put volume characteristics too. So I'm just saying, knock yourself out on that. You can put in whatever sort of basket of stocks you might be looking for out there, that you want to look at. I mean, here's one that's not even going to work on the column because it's going to suck up too much data and it will reject it. But you could come over here and just do something like this. I mean, this is massive, but well, here's the NASDAQ Composite. Here's the NYSE. Uh, I don't know how long it's going to take to get through this, guys, but let me just show you. Like, for example, if you wanted to have it that big, you could actually do it. Okay, 33. So we can't even access all of this over here on the columns, but we can here. This is 2,700 plus stocks in the NYSE, and you got them there. What was it? Maybe 3-4 seconds? Very quick, 5 seconds or so. So you can look at all different categories and find different things in here too. So just be mindful of that with the scan itself. Now into the scan, let's pull it up. It's just really straightforward. Same scan. You could change the same details of the scan that you want as well. I tried to keep it as easy as possible, but notice over here, I don't have to color anything like we would with the columns. There's no color coding necessary for the columns. We had or numbers either, right? You're getting more data over here. It's in a smaller group of stocks that we can look at. I forget what the number is. I think, what is it? Thinkorswim. Does anybody know how much data you can pull up? I think it's just maybe it's 700 or something, or 1,000. Anyways, over on the column in terms of line by line items with coding, that is. This is the coding that takes up more bandwidth, and they just won't allow you to do too much because it just wears on the server too much. But over here you don't have that issue, and all we're simply doing with the scan, plot scan, break now or previous, because we've got everything combined in the end as we've tied those two together. So that's that. Let's just pull one out just for the heck of it to take a look at it. Anything else in here that might be in? Let's just see here. Oh, there's a life and health. Oh, insurance. Yeah, there's a lot. Life science tools and services. Wow, that is. Oh, that actually came up on our list. MTD is in the NYSE. All right, I'm just going to choose one out of the blue. Here is an electric utility company, EDN. Have no idea how much volume it's got. It's on the NYSE, but it is on the NYSE. EDN, electric company. There you go. So you're not going to find this in the S&P 500, folks, but there you have it nonetheless, okay? All right, so let's do this. Get this guy up here and ready to go. I've lost my chat window. All right, hang on just a second. I've got to get that back so I can chat this in. Okay, one second. Okay, I've got it. Now, let's go ahead and put this in right now, and this is going to be our scan. So this is the same one. So it's the bull flag plus Cahold, two concepts together, and it's going to be the scan. And again, folks, if you're watching this recording, you will find it at the bottom of the description, okay? Oh, okay. Thank you, Kevin. He gave me a little bit of an update there, but I think you let me know, Kevin, if that's going to work okay. I think we're good. I think it sent through at least as near as I can tell. Yeah, so there you go. So James brings up the point. Yeah, there is that custom script limit. And that's what we're getting around when we run this as a scan. So keep that in mind. All right, folks. Well, I want to finish off and just see, because I know the NASDAQ has been under some pressure, right? With the techs coming down. Today was a big down day. By the way, we tested right off that 50 period moving average. They've been holding up, or 30, I'm sorry, 30. And we came down, and that's an engulfing pattern of just a few days. That's not your average engulfing pattern. We're going to go 1, 2, 3, 4 days here. That's just a bigger move, obviously, a huge dip. But I wanted to just see, do we have any flags in this just for fun? Let's just check it out. We can do it over here too. Whatever we want, we could definitely fit in that number here. And let's go. There's 100. So we got 2. Oh, so those are still listed on there. Yeah. See what I mean? So you're still having some healthcare stocks within that group, and there can be oftentimes rotations in the market, folks, but you're getting that right over there. Yes. In fact, I'll pull that up just so everybody can see that. Last week, as you guys might recall, we were looking at I'll pull this up right now just so you can see it. There's our live class going on. Encourage you to subscribe to our Trader Talk channel. If you like today's presentation, definitely smash that like button on the YouTube side. But right over here under playlists, I'll pull it up so you can see it. You can screen for a number of these by a title as well if you wanted to. This is our class last week. It got posted about a day and a half late. So that was this last one we did was the Elder X-Ray. This class got posted about a day and a half late. This one should be ready to go probably within an hour we're done. Oftentimes, keep that in mind if you want to check it out, other parts of it. But folks, here, I'll go ahead and just punch this in right now. We'll put this in to our chat, and there you go. So this is the ThinkScript playlist. Any of those, because I did mention a couple in there. There was an earnings in there. In fact, you can scroll down here and find it. There's an earnings gap and go. There are some other ones too, but we got a lot of scripts in there that we've discussed before. All right, well, that is that. All right, you guys. I think we've shared everything. We've shared 4, if you include the rotation grid as well. So that's in place. We've cleaned up that code. It should be fairly straightforward there. Let me know, though, if you have any follow-up questions. Always, I'm keeping an eye on those YouTube comments. If you guys have anything there, to let me know. But today, man, it was all about, we'll just choose this right here. It was all about trying to find where the strength of the market is. And this is kind of helpful because I think it could be useful in tying into Kevin's rotation script, which is grid, I should say, finding areas that might be showing strength. And then, hey, you can scan just for healthcare if you wanted to, a larger screen, and just finding those that may have had good earnings results, may have broken above a range, may have been flagging, and may have had a K-hold. All those mays, 4 of them, this script would pull up. You could use it, though, like from a rotations grid. So, all right, everybody. That's what I had for you today. Utilize this. I think many of you do look at bull flags. We certainly do in the swing trade class. Thank you so much, Kevin, for your help today. Always helpful. Here I am in ThinkScript using some of his scripts as well as grids, and tying it in. But all right, everybody. Well, hey, catch you all next time. I'll keep an eye out for any comments that you might have. Thank you so much, Kevin, each of you, for being here. Folks, have a great rest of the day. See you next time.